Hi, my name's Simon Popple. I've previously written newsletters for Money Week and Agora Financial. I wrote Metals and Miners for Money Week and Gold Speculator for Agora Financial. I've been involved in the mining industry for many years, and today I want to give you a brief presentation on how to evaluate a mining company. Now, using the system I'm about to tell you about, I've actually tripled the value of my investments this year. Obviously, it's been a good year for gold and silver, but I expect that to continue for a number of years. So what I want to do now is just give you a good overview as to what I look for and what you should look for when you're evaluating a mining investment. So let me just start with the basic system that I use. I call it the 3Rs system. Let's just talk through each R individually. The first is resources. Clearly you need to have a bit of time. You don't need a huge amount of time, but you do need time to read through research on companies. You also need some money. Now, I know that's a bit obvious, but you actually need enough money to have a diversified portfolio. Personally, I think you need about £10,000, so you've got 10 different investments, but you certainly need some diversity. Now, moving along, you then need to manage your risk. Now, this is really important because not all mining companies are the same. Some are far riskier than others. So you kind of really need to understand the fact that producers tend to be less risky than explorers, and have a good understanding of the kind of companies and the dynamics of the companies that you're potentially going to invest in. And then once you've actually done that, discipline is actually very important as well, because these companies can be very volatile. The share prices can move 10, 20, 30% in a trading session. So once you've actually got a strategy that you believe in and you want to stick to, don't let the market sort of goose you out and either sell when you're making a big loss or a big profit. Stick to your strategy. The third R is incredibly important. You've got to research what you're doing. I mean, what I do is I rationalize ideas for you because I've worked in the market for a long time. If you don't want to use someone like myself, then use whatever source you want. I mean, all I would say is just use someone who has got a universe that you can properly research. There are hundreds, if not thousands, of junior mining stocks out there, and if you're not careful, you'll just get swamped with the number of stocks out there and not be able to do enough research, and therefore make decent investments. What I do to try and simplify my research is use a system known as the B.R.I.G.E system, which stands for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. And it's not a foolproof system, but it's a system that should enable you to avoid making kind of rookie mistakes and give you the best chance of success. So let's just sort of take you through this in a bit more detail. As I said, resources, you've got to have some time and money, and whatever you do, you use it properly. So don't put all your money into one stock, and use the time to properly research what you're doing. So as I say, I provide the research, but you do need to read it, and plenty of other sources. So whatever you're going to do, just make sure you believe in whoever's providing research and read it. And risk is incredibly important, so make sure you understand the risks that you're taking. And as I said earlier, formulate a strategy and stick to it. Don't sort of jump around and abandon your strategy halfway through. You really do need to believe in what you're doing. And as I said at the top of this presentation, I think you need at least £10,000 to allocate to the sector. to get the diversity. Personally, I would say you need at least 8 stocks and perhaps 2,000 in cash, or if you can afford to, perhaps have 10 stocks. But it's a volatile sector, so if the price does go down, then it's nice to have some capital to top up your position. Now, research, over the last 20 years, I've got to know the industry very well. And as I said earlier, rather than wade through thousands of mining stocks, I've distilled a list of my favorites to what I view as the best. My core portfolio is only about 25 companies. It's important to focus on what you're researching. There are other people out there that do similar things. By all means, use them. But all I would say is you do need to have a relatively small universe. So make sure they're familiar with the industry. Yes, you can do it yourself, but it will take a huge amount of time. And so you do need to make sure that you have got the time to devote to it should you want to carry out a lot of research yourself. Now, not all mining companies are the same. Very broadly, you can split them into 2 groups. The first is producers, and the second is explorers. The producers have already found whatever they're mining, gold, silver, copper, and they are producing it. Explorers are looking for it. Producers tend to be lower risk because they found that, so it's very much their costs versus the prevailing metal price that they're mining. The only thing I would say about these is because of the virus, some producers have been forced to stop producing and mothball assets while they deal with the virus. And if they've got debt repayments that are due to be paid, then that could be an issue for them. So if you're looking at producers, I'd urge you to look at companies with more than one asset that's producing, just in case there's problems with one asset. Explorers are far riskier. They are out there looking for gold, silver, whatever the commodity is, and if they don't find it, generally they have to issue new shares to raise more capital for the next exploration adventure that they put themselves on. And if you're an existing shareholder and they haven't found anything, then this additional capital will dilute you, meaning that you've got a smaller share in the company. So as I said, producers tend to be lower risk than explorers, but you do need to find out what they're producing and where they're producing it. And as I said, a diversified portfolio, it probably makes sense to have a bit of producers and a bit of explorers. And I'd also add to that, you probably want to have different metals as well. So don't just have gold miners or silver miners. I'd recommend having at least gold and silver and probably some other commodities as well. Just going into the B.R.I.G.E system, which I use to analyze the companies, I think it'd be useful just to give you a very quick snapshot as to what I'm looking for. Now, balance sheet, just make sure it's right for the company. A big red flag is you don't really want any debt with an explorer. It's okay with a producer, but you want someone who's generating cash flow if they've got debt on their balance sheet. Resources, you need to look at what do they already have. Are they likely to get any more? And it's also important to look at the gold or silver price or metal price that was used in calculating those resources, because if the price is a lot higher than the price that was used to calculate it, then it may mean that they've got more resources that are now economic. But if the price is actually less than was used, it may mean that they've got less resources. So it's something you need to keep an eye on that. Infrastructure is very important. You can get very excited by the grade and the resource, but if they don't have power, water, roads anywhere near their project, they will have to build them and incur the cost of building them to take the asset into production. And so you could have what looks like a very nice asset, but if you've got no decent infrastructure around it, it may not be economic to take it into production. Diversity, again, I sort of touched on this earlier. You don't want to have all your eggs in one basket. So what I'd suggest you do is to look at diversity from both a metals perspective, a mining company perspective, a geographic perspective as well. I mean, I wouldn't recommend having all your assets in one country. So really think about that as well, because it's very relevant to your portfolio. Grade, again, is it economic? Don't get blindsided by high grades. As I say, they need an infrastructure around them. But even if you've got an infrastructure around them, you need to look into the recoverability of the ore and the profitability of similar grade projects in the area. A good example is in the US. There's parts of the US where it's economic to produce gold at a much lower grade than in other areas because of the climate. It favours a heap leach procedure, which is generally much cheaper than many other processes. And finally, exploration potential. You need to have a look at what exploration has already been carried out, and more importantly, what the potential is. If there's a huge amount of exploration already carried out on a project, then clearly there's less chance of them finding anything spectacular. But if it's an area in a very or project in a very kind of prospective area with little exploration so far, then there's greater chances of them finding something that others might have missed. So it's really important you understand this and apply it, because there's one thing sort of understanding it, but if you don't apply it, then it's fairly meaningless. And I think the other thing is, you could apply it, but you do need to apply it correctly. So please look at all these aspects. There are many others as well, management and other things to think about. But I think this is a useful checklist that you should at least start off with. Now, risk management. What I try and do is break this down for people. I use a fantasy football system because I think people understand that. So the stadium is physical metals, goalkeepers are the largest mining companies, defenders tend to be mid-tier producers, midfielders are either new or close to production, and forwards are your out-and-out explorers. So I would generally say you need a bit of all of these to have a balanced portfolio, but a lot depends on your appetite for risk, whether you want to have more midfielders and forwards or more goalkeepers and defenders, and indeed stadiums. So you have to make sure that your investments match your appetite for risk. I mean, the forwards can deliver spectacular results, 10, 20 times your money, but you don't want to have too many of them in your portfolio because they are incredibly risky. Likewise, stadium and goalkeepers, the returns tend to be much lower. So if you're looking for higher returns, you do need to get a balance in your portfolio between the various different positions. So, I'd suggest have a bit of everything, but please bear in mind that all mining companies are different. Now, if you get it right, as you can see here, I mean, Chalice Gold is one that I actually put up to my subscribers at about 15.5 cents. I put it up on LinkedIn at 12.5 cents. Today it is well over this price. I think it's about $2.50 or even higher than that. But as you can see, I've got other stocks that I've suggested people get involved, and the prices have moved up significantly. Now, these are very much forwards. So as I said, you need a balanced portfolio. You don't want to be all in forwards, but it just shows that the returns can be fantastic if you buy at the right time. There is a recipe for success, but you do need the right ingredients. So there are no guarantees. These are investments. You are taking a risk, but I think that if you select your portfolio carefully and properly research the companies, you can manage that risk. Now, personally, I don't think it's ridiculous to have at least 1% of your portfolio in gold and silver. Now, most people have none. I clearly don't know how much you have, but I would seriously consider having some, especially given the interesting times we find ourselves in. These are my contact details if you want to get in touch with me. We'll be delighted to set up a call and find out what you're looking to do and see if I can help. And please look at this information as well, because it's important that you do seek advice from a independent financial advisor if you're going to buy or sell any shares. So this is something that I'm sure you're aware of anyway, but please please read this information and take it on board. Many thanks.